Oh man, so a huge day for Bitcoin, crypto, and the markets as we get a key piece of macroeconomic data which further allow us to identify, are we in a recession for those still unsure. As you guys know, we printed officially the second negative quarter in a row of GDP, meaning the market is technically in a recession, but then we had the political kind of mess around changing the definitions and we're not in a recession. Well, what is different? Well, the whole claim by those who aren't identifying we're in a recession from a technical perspective is that we have this really strong labor market, which is not normal in a recession. In a normal recession, you have a lot of unemployment, you have the wages fall, demand falls, and then you get demand destruction and you enter a recession. But what the market is hoping on, which is one of the reasons we saw a rally, is that the quarter printed negative, but we're not actually going to feel that because consumers will still spend and the jobs figure will remain okay. And that is what we're going to find out, yes or no, at 8:30 a.m. Eastern time. We're going to get the non-farm payrolls, and this is going to be a huge catalyst. Now, normally this is a big catalyst anyway, but this specific time, it's going to be a big catalyst to identify, are we going to plunge into a recession, a deep proper one, right, with a weak labor market, or has the Fed managed to keep this balancing beam of keeping labor okay, falling enough that such that inflation falls, but not too much that they plunge us into a deep recession where people are unemployed, wages are falling, no more spending, and demand falls, okay? So that's what we're looking for. Now, as you can see, we'll head straight over into the Bitcoin chart to look at the key level, guys. Make sure you guys are smashing up the like button as I'm sitting in this hotel room giving you guys these updates as and when these non-farm payrolls come out. I will give you guys another update once we find out what the reading is and see how the market reacts. But for now, let's head on over to the hourly chart, because what I want to show you is that Bitcoin is still trying to bounce, right? It's still trying to create this higher low. But if I switch over to the daily, I do want to remind you that we've been tricked a couple of times here. We've opened up really strongly here today, this morning, and we've done that the last 3 days. Look at we've done it plenty of times over this last period. Since we've got rejected from 24K, okay, at the yellow line at the top here, what have you seen? Huge volatile wicks at the top of these candles. So we've been forward about 7 days in a row where the market starts off very green, runs up, and then the bears finish off strong. Runs up, bears finish off strong. Runs up, bears finish off strong. Particularly the last 2 days, we've seen that happen hugely. So are we going to fall for this again? Is that same thing going to happen again? And more importantly, are we going to come and test 22K today if we get bad news and fall back into our channel? Or can we get some good news and finally use some good news to help us push through 24K? Those are the scenarios we're looking out for. We just need to see, are we going to do this? Are we going to come here? And then what can we see? What are the variations? And these are the three scenarios I can see playing out. And it's going to, obviously, if we get positive news, which I'm going to show you what that means, then hopefully we can start working our way towards 24. If we get negative news, I'm worried we're going to go test 22K and maybe fall back into our channel where things start to get a little bit messy again. So let's switch on over here. You can see the pre-market is opening up fairly flat, right? Even yesterday and today, the market is focused on this. This is the figure they were waiting for. This is the one they want to hear. And you can see the Dow Jones 0.1 flat, S&P flat, and the NASDAQ 0.14. So if we take a look at the exact figure and what we're expecting, well, economists expect 258,000 jobs were added in July. This was down from 372. So 372,000 in June. They're expecting that to cool off, right? They want a modest cooling. They just want it softening. They don't want it to plunge. They don't want this figure to come in at 150 or something like that, then the market's going to panic. If it comes out at that 258 level, 260, 265, 255, the market's going to be okay. The market wants this like Goldilocks figure, right? If it comes in too high, the market's going to have a panic attack as well, right? If it comes in beyond 372, that you're adding more jobs in June, which is very unlikely. Obviously, you've had your 0.75 interest rate hike, so this is supposed to come down, right? That will then give the markets confidence that the Fed is bringing it down, therefore inflation can come down, but at the same time, they're not bringing it down, crashing down to earth like Paul Volcker did many years ago when he plunged the US into a recession, okay? So this is the balancing beam that everybody's looking for, because remember, the thing they're hanging their hat on right now is we're not in a real recession, right? We're in this technical paper recession where it shows 2 negative quarters of GDP, but the market's saying, no, we've got a strong labor market, therefore this is different. This is different. We can rotate, we can start working our way back up. So this is a critical figure, and we can't talk about it more than enough today. So that's the main focus of today. Fear and greed index sitting at 31. Market is getting comfortable with this level, right? The market has, the first time when we dropped down towards these kind of range, the markets were very fearful, but now the markets are used to it. People who are in the market are people who have opted into the market. Those who wanted to panic have had plenty of time to panic and leave the market. Therefore, you've got people in the market now who are starting to become a bit more optimistic about the price, and they're getting ready for the next run up. So that's what most people are expecting now who are holding crypto. Okay, so let's take a quick look here at the charts. And what you can see here is we are trying to get that bounce off the EMA ribbon, right? This is really, really important here on the daily chart. We ran up, we came all the way into our EMA ribbon, typical stuff like I always show you guys, and then you're trying to get that bounce right at the bottom of the EMA ribbon. So the worrying thing is, if we fall to the downside, if we start going to that 22K level on that horizontal line here, back into the channel, then not only are you trying to go back into this channel, but you're also going to lose your daily EMA ribbon again, which is not fantastic at all, because I'm going to have to work hard to try to break it thereafter, which is even harder to do. If we head on over into the 4-hourly, look at the EMA ribbon, you can see that it's trying to get a bounce here of its 200 moving average. So we'll keep an eye on that to see whether that can help us act as support. But ultimately, the technicals aren't really going to matter over the next kind of 3 to 4 hours. What's really going to matter is this non-farm payrolls figure. So we need to wait for this figure and then take the direction once we've seen that. There you have it, guys. Quick update on what we're expecting today in the market. I'll be back once we find out what this non-farm payroll is. I'll find a quiet area and I'll give you guys an update, whether it's on my phone or iPad or something. I'll make sure I get that data out to you guys. So don't forget to smash that like button. Don't forget to subscribe. As always, check out the video here and I'll see you in the next one.